Hi, Bruce here from Voodoo Trading. Welcome back to our YouTube series where we walk you through how we trade our systematic rules-based trading strategy. We're not suggesting that you should purchase any of the securities that we highlight here, but rather our goal is to show you the steps and the thought process that we go through to remove emotions from the trading process and systematically implement our trading rules. It is our belief that each trader should develop their own trading strategy that fits their personality and with rules that they understand and can systematically execute. Okay, let's get started and review the new exit signal for our active wheat ETF trade that our trading strategy generated earlier this week. And then towards the end of the video, we'll review the performance of our active trades. The wheat ETF WEAT is one of the over 50 markets that we follow and review daily. We added wheat to our watch list in the second half of 2021 because it exhibited characteristics of a trending market with a number of higher highs and higher lows, as shown on this 2-year daily chart of the wheat ETF. We entered the wheat trade back in February of 2022. A quick overview of how this trade evolved. The trade set up when the wheat ETF broke through the previous high of $8.31. The setup is shown by the purple dashed line on this chart. Our buy stop order was hit when the upward trend continued and our $8.49 buy on stop order was filled. This is shown by the green line on the chart. You can see that the volume spiked the day that we entered the trade. The day we entered the trade was the day that Russia invaded Ukraine. We do not trade based on news events. We let price and trading rules lead us, but in hindsight it is obvious that the price chart was anticipating the invasion. As soon as the trade was initiated, we placed a stop loss order at $7.89 so we could control the amount of risk on the trade. Our risk control determined that we could afford to buy 1,250 shares of the ETF. Let's see how the trade played out. You can see that the day after we entered the trade back at the end of February, there was a strong correction, but our stop loss was not hit, and a strong upward trend ensued, followed by a sideways market where the original high of the breakout move was not broken. For our profit stop exit, we use a 4 times average true range chandelier exit trailing stop. This trailing profit stop is represented by the pink line on the chart. We'd originally closed below the trailing stop in late March, at which time we placed our original profit stop exit just below the low of that move. Our original profit stop exit is represented by the brown line in the chart. As you can see, the price level was never breached. In early June, the price once again closed below our 4-time ATR trailing stop, at which time we placed a new profit stop exit at $10.33. The stop was hit on June 21st, at which time we exited the trade with a 22% profit. Not a bad trade when most markets are down about 20% for the year. As we do with every trade, we log the trade statistics in our trading journal so that we never lose the valuable data. We save the chart with a green background so that we can quickly identify it as a winning trade. We record when we bought it and the price we paid. We document when we sold it and how much we made on the trade. On this trade, we made $2,300 or 2.3% on our theoretical $100,000 trading account. We then review the trade to see if there are any lessons we learned that can make us a better trader moving forward. This trade was successful because we followed all our trading rules and made money on the trade. The majority of our other commodity holdings are exhibiting similar price action as wheat, and we are close to being stopped out for a profit on a number of other holdings. If you would like to follow our trades, please subscribe to our channel below and click the bell and you'll be notified when the next video is released. If you think the info that we have discussed in the video is useful, please hit the thumbs up button below and share the video with your friends. Okay, let's look at our active trades. After getting stopped out of the wheat trade, we now have 6 active trades. We are currently about 70% invested, but as we previously noted, we are close to being stopped out in a number of these positions, as the commodity sector is exhibiting weakness along with the overall market. Our trading strategy currently has a 37% success rate, which is close to our 40% target. As of the end of May, our trading strategy is a 15% year-to-date return. although this will have deteriorated throughout the month of June as commodities have come under pressure. Please let us know if you have any questions or comments on today's video. Thanks for watching, and we'll talk soon. Cheers.